Have you been approved for a home care package before September the 12th, 2024? If you have, you're protected under what's called grandfathering arrangements. But there are some big decisions coming, especially if you move into residential care or you need equipment and home modifications. So let's walk through the changes and what does and what doesn't change and what to look out for. Firstly, what are you protected from? You might have heard about grandfathering or the no worse off clause, but what does this really mean? If you were receiving a home care package before September the 12th, 2024, or you were approved and waiting for your home care package to be assigned to you before this date, you're protected by what's called grandfathering. So from the 1st of July 2025, when the supported home program begins, you will move to the new program, but you will keep your current income-tested care fee structure. You'll stay on your existing package level and you'll have access to the same amount of funding you had under home care packages. This is referred to as the no worse off guarantee. Next, let's look at why you shouldn't opt in. If you're offered the option to opt into the new fee arrangements, for example, if you move into residential care or if you change providers, think carefully. I have run lots of different scenarios and I can't find any likely situation where you'd be better off opting into the new arrangements if you're covered by the current ones. Under the new system, your income-tested care fees would be replaced by a new contribution, which will almost certainly be higher than your existing contributions or income-tested care fees, unless you only receive clinical services and will only ever receive clinical services. That's things like nursing and allied health. There's a new lifetime cap, but it's $130,000 compared to the $82,000 under the current system. There is a 4-year limit on care fees, and this might sound appealing, but it starts from the day you opt in, not your past time receiving care. So you'd need to be guaranteed that you're going to live much longer than the 4 years to make it financially cheaper, and there are definitely no guarantees on this. Here's the clarification. If you stay on your current fee model, you keep the $82,018 lifetime cap, and anything you've paid in home care income-tested fees continues to count towards that cap. But if you opt into the new system, your previously paid income-tested care fees won't count towards your old cap of $82,000. It will count towards the new cap of $130,000. You will be starting the 4-year payment limit from scratch, so there's no credit for the time that you have already been in care and been paying fees. So if you've already paid a significant amount in home care, staying on the old system means you're going to hit your cap much sooner and you'll stop paying fees earlier, even though there is a 4-year limit on the new system. The bottom line, if you are approved before the 12th of September, you are almost always going to be better off staying on your current fee model. The only case that opting in might make sense is a very rare case where you have paid very little so far in income-tested care fees and you are confident of remaining within residential care well past 4 years. So now, what happens if you move into residential care? So here's what changes and what doesn't. You're going to stay on your grandfathered income-tested fee structure for the care side. So there's no hotelling supplement or non-clinical care contributions, but you will move to the new accommodation rules, even if you don't opt into the new fee arrangements. So this means the daily accommodation payment will now be indexed twice a year. The refundable accommodation deposit, or RAD, will now be subject to a 2% retention fee each year, and this is capped at 5 years. These rules will apply regardless of when you were approved for home care, provided you move in after the 1st of July 2025. So if you think you're going to be moving into residential care shortly after the 1st of July, it might be wise to think about that before. So yes, your fees are going to stay the same, but your room costs will increase. So next, let's look at what if you need equipment or home modifications. So under the Supported Home program, there's a new national scheme for assistive technology like shower chairs or walkers or hearing devices, and for home modifications like grab rails, ramps or bathroom modifications. Here's how it works if you're grandfathered. You'll still receive your full existing package level, so the funding equivalent to level 1, 2, 3 or 4, just like now. If you need equipment or home modifications, firstly, your provider will check whether you have any unspent funds. You will be required to use up these unspent funds first. Once those funds are exhausted, you might be able to access additional funding through what is called the ATHM scheme, the Assistive Technology and Home Modification Scheme. So this scheme offers up to $500 for a low tier, which contribution, which doesn't require any allied health approval. A medium tier up to $2,000, which does require either a physio or OT approval, and for higher level modifications or technology, up to $15,000. And this one definitely requires OT. There are possibilities to get extensions on this amount for complex cases or very specific equipment. This scheme is subject to assessment and requires the prescription for the medium and high level categories and verification. So let's just recap. If you were approved for home care before the 12th of September 2024, you're going to be grandfathered, and that is a good thing. Don't opt in unless you're absolutely sure it is in your favour. And if you move into residential care, your fee protections remain. Don't opt into new fee arrangements, but your accommodation fees for your room price, so your RAD or your DAP, will be under the new fee arrangements. And if you need equipment or home modifications while you're still living at home, there's new funding available, but only after using any existing unspent funds. There is so much to know in all these changes. Subscribe to see more practical videos to help you through everything aged care.